Yeah, so I'm always a fan of back testing anyway, mate, because it builds confidence in. Obviously, you can gather data from it, so you can sort of like always improve on your on the system as a whole or whatever. It builds confidence in. I don't know, let's say you see a trade and obviously it meets all your rules or whatever, you're not hesitant because you're back testing and obviously the data collection from it will kind of tell you that yeah, it's if it works out, it's great, you know, roll it in the cash or whatever, and then but like I say, it'll help ease that trading psychology kind of thing. Now, I'm not a huge fan of or a believer in the trading psychology kind of chit chat. I think it's all what I think 90% of people's trading psychology issues is they haven't done enough back testing, data collection, and journaling. So myself, maybe I'm just different to most, but because I've done so much of the back testing, so I figured out like all this what you're seeing on the screens now. You know,
Now,
spent
and
about
about
a year and a half figuring it all out, kind of stuff, and then from that point when I kind of figured it out, I started like back testing it properly, journaling, data collection, things like that. I did that for a further 15 months, a while, like forward testing before I actually put a real trade on. And then that whole 2 year odd period of like figuring it out and back testing stuff, when it came to actually putting a trade on, there was no trading psychology needed because I'd seen hundreds and hundreds of times that like as long as it meets the rules, there's a certain percentage chance that it will win. Obviously, there's a chance it'll lose as well, but it's when you do it correctly, it's almost like a playbook and a step-by-step guide. And obviously, if you follow that step-by-step guide, like you end up with profit at the end of it, kind of thing. So, and the back testing and all that sort of stuff just takes all that worry, all the FOMO, all the hesitation, all the greed away because you should have this stuff like this data in front of you that says if you step off this track, like the highest probability is that then you're going to start losing money. So you kind of just don't do that if that makes sense. And you do it correctly. So what do I mean by when I do it correctly? So now, I think this will apply to everything, not just supply and demand. Any strategy or whatever that you pick up is there's a period at the beginning where you kind of trying to piece it all together. Whether that's obviously we look at imbalance, there's structures, there's liquidity and sweeps. Um, that's pretty much it, really. But like there's a process to it all, So, but like in the beginning, you're figuring it out you kind of trying to put the story together as such. There's like so for me, there's a starting point kind of, and then obviously by there it goes step by step by step by step until you get to the an entry involved.
Can I ask
So
a question?
yeah, absolutely yes,
I'm asking about this correctly because I'm in the stage of backtesting another some strategy,
yes,
and I'm halfway, let's say, to do 1 year.
yes,
Uh, and from one of my teachers,
hmm
mm, I've got the information that actually I should look for the one correct entry.
yes,
While my strategy consists it can appear 3 times within
hmm
3 hours because I'm checking 1 hour range.
yeah,
So let's say starting from 8 a.m. to 10 a.m., actually within 1 hour, the strategy can appear. So what
hmm
I am doing, I'm checking each hour. If it appears, then I was thinking maybe to compare which hour is more beneficial, more
yeah,
profitable through the year.
yeah,
But what I got received from him, he said, no, don't do this. Just
yeah,
look for the best entry
yeah,
within these 3 hours.
yeah.
So that's why I'm asking what is correctly.
So, I mean, it sounds like you was along the correct sort of like lines to begin with anyway. Now, obviously, some educators will give you slightly different advice. obviously I mentioned about journaling. So that's what I would say you would journal is, like I say, you figure out how you figure out the setup's fair, so you know what you're kind of looking for. Then once you figure the setups out, you go and back test that setup. Obviously, you go find it multiple times in old data, which is basically just zooming out on the charts, going left and see how many times you can find that system that meets those rules multiple times. And then obviously you write that down. You collect. You should, like I would say, you collect data on uh best times to trade, best days to trade, best sessions to trade, average size stop loss, like average win or your most profitable win, because there's a few variations of that. So when I say correctly is once you've got all this data, you've got a you've got all this information written down. So like if you have 100 trades and 60 of them say go 1 to 3, 10 go 1 to 10, and then you've got like the rest of the 30% or whatever it is that's left. I forgot what the first number I said is now, but if I think there's 30% left. Like that could be there could be 10% of outliers that go mega amounts, and then 10% are losers or whatever, or more, But you can use these numbers to and not just it's not just the numbers, but on that example is you can work out from a mathematical sum of what the best and most effective risk to reward is. So the case of let's say there was 10% that went, say, 1 to 50. Now, if only 1 in 10 win, but it goes 1 to 50, that's technically your most profitable risk to reward, because then that's 10 times your 50 is 500% or risk to reward, whereas your 60% at 1 to 2 is 120 R. So, plus obviously you would catch others in that as well from the higher percentages, but like the idea is that when I say correctly, is you gather all this data, it tells you, you work it all out, and then it tells you what the best approach is. So if your data that you collected said that you check it, did you say you checked it every hour between a certain session? Sorry.
Yes, I checked like 8 a.m., 9 a.m., and 10 a.m.
Yeah. So if you collected data on all of that, it overwhelmingly stated that, or showed you that, like 8 a.m. in that hour was your best hour, and the other 2 hours that you said was mainly losers, like your data is saying to just do that 8 o'clock.
Yeah, that's what I thought, but then I
Yeah,
got this,
yeah.
feedback.
So,
Well,
so I think that's correct. So I often say that trading's a data inputting job. So like, my screen's a bit of a mess. You probably don't really mean much to you, maybe, but like
well, the
it's
idea behind this correction was, I think, just to train your eye for the best trades.
yes, yeah, yeah. Obviously that becomes part of the back testing journey as well, though, because once you've figured out, sort of pieced it together, then you're going to finding it in old data. That's also training your eyes, and then you've got to train your eyes to catching it in a live situation as well. But
Yeah,
that's
I thought just to compare, I mean, all the data I can gather and just to
yeah,
see, as you said, which is the most profitable hour, for example.
yes,
That would give me some point to decide what I'm going to do with all of
yeah, yeah.
it.
So I mean, I don't restrict myself to like certain hours or things. So how I go about it is I just mark up me. I'm very much based on the structure. So if we can focus on this red structure line here, I've made rules for structure. So every one of these red swings meets a criteria of 4 or 5 rules for me.
Right.
Um, so I mean, I've got rules for all of it. So, but this is what I mean by it's like a data entry job. So when I was figuring it out myself, it was when I applied these rules to structure, it generally works best. It's the most probable outcome. It's the same for liquidity. Um, I mean, there's only a couple of rules for liquidity, and it's that they've got to be really clean touches. So I don't allow for a trend line, sorry, it's 3 touches minimum, and each 3 points has got to be very accurate. So if the middle touch is a little bit past, I don't count it because from my back testing, it showed me that they was the ones that failed the most. The trades following them failed the most. But I mean, that kind of makes sense as well in the fact that if the middle touch is a little bit short, it kind of might not be a valid trend line of 3 point touch. Because what the middle point's beyond, so it's not three clean touches. It might not be liquidity, which means that when them trades was losing the most, it's easy to just go if it's not clean, I'm not interested, move on. So that reduced a lot of obviously losers as I was doing the back testing process. So and then like I say, just your data just kind of tells you that what's the best. So, like I say, I would collect data on it for yourself and just go from there. See what it shows you, kind of thing, rather than is it okay for a spread hour candle wick to pass through the trend line? Yes, it is, mate. Yeah. So I'll show you an example of a spread hour wick. Go on the hourly. Try and find. So I think I had one last week, week before. And might be an ask, actually, to be fair. There was, I definitely had one that was whipped through on spread hour, but not. Sorry, bear with me, guys. Probably going to struggle now, I bet. Do you know when you're not looking for something? I always find it when I don't want it. I was literally looking at it the other day. Hmm. Doing this to me. Come on. Might have been Dax, to be fair. Hmm. Bitcoin. No. What I might have to do, mate, is uh post it in the chat when I find it. See that spread hour there, so that this trade's possibly still live there, but that doesn't show you that it's then played through it. Yeah, I'll have to have a scout afterwards, mate. But yeah, but basically all it is, mate, is spread hours doesn't exist. It's what I think happens, mate, is it goes from say New York at 10, obviously apart from when the clocks change, then it goes to Tokyo. They start theirs up at like 11, so that hour in between is just your broker doing broker shenanigans type of stuff, mate. So the reason what for that is if obviously if you find a spread hour price on say like FXCM, you could then open forex.com and that hour price will be completely different. So why I think that sort of suggests that it's not non-existent is because if they're like this wick on this, I'll show you on this one as a bit of an example. So this is the 10 o'clock spread hour drop here, which is it's only 12 pips. But if you imagine to move the actual market, 12 pips is probably a lot of money. Now, your broker probably doesn't have that money to do it, to actually move the market in that way, shape, or form at all. So it's that just that hour for them to be able to possibly take people's stop losses. But if obviously, I think if you think about it from a now we all view it as if going this is going to try and take stop losses, but it's also going to hit people's TPs as well. So this is why I think it's just broker shenanigans because they're probably way up every night whether if it drops 10, 12, 20 pips or whatever, they'd probably go if we wick it up, we're going to hit a load of TPs, drop it down, and then it always seems to about return to its right price at 11 o'clock, pretty much on the dot as well. So what in theory we probably does happen is so if that drops there, I mean it retained perfectly there to be fair afterwards. Yeah, perfect level line. Come, this is the point in which 10 o'clock hits, it drops, does its thing. This whole hour here is made up. Comes to 11, obviously it's comes above it after 11 o'clock. That's like quarter past, but it shoots up, comes back to the point in which the market closed, as if they've got to fill this void almost, because this is a closing price, comes back, open price, and then goes about and does its thing. Now, that alone there is possibly worth testing for somebody. I mean, I'm not interested, but that might happen a lot. It's worth looking into. I'll have a quick look actually. Pick a random chart, see, check GBP CAD, not NZD. Clicked on a few. See if there's any more. But I mean, this is all trading is. It's just finding a pattern. 1020, so it drops there. Drops there at 10. Just after rate returns to it. Pretty much on the dot. Just shy of. I don't think it returns to it afterwards. But yeah, that's all trading is. It's just a pattern recognition thing. Drops there. Yeah, don't work on that one. But yeah, it's just spotting something and then trying to repeat it to make sure it can make you money, which is what all of it is. Now, I'll move away from spread hour. So I don't know if any of all of you would have seen it. I posted several trades in the chat this week. This one of them. I'm just gonna quick flick through and just kind of show you that it's just this. It's like the same thing on repeat week in week out, and then I'll get to I'll go through some of the actual system as well. But I can't remember what all these cells was, so I'll flick through again and just see. So at the minute now, I'm currently looking at GBP odd cells. So structure wise. obviously we're trending bearish at the minute. So obviously up here we're making medium 15-minute lower lows, lower highs. We're kind of in the area of where it could reverse from, but I don't think it will. So if we look at this last 15-minute stretch or structure, sorry, obviously price comes from all the way down over here, puts in a low, we pull back there, make a new low. That didn't stick down. Make a new low. Call that my 15. I know I'm on the 4 hour, but I know this is my 15. So as you can see, from that high there to this low, it's just trended downwards. So all these like internal like zigzaggy bits will be what I consider my 1 minute break, 1 minute structure. Yeah, I don't know why that was difficult. So what we can do with that is because we know this high is still intact and this low is still intact. So they are there and there. Still not been taken. Yeah, it's coming close, but it's not been taken. So just let me turn that structure darker so you can definitely see it. Yeah. This is the live range at the minute. So that's the high, that's the low because they're both still intact. What we can then do about that is we can start to think of we're in the top 95% of this leg. Obviously, this is how far it's retraced. We're so far, we've pulled back so far. So if I just draw a box from the bottom to the high, you can see there that each one of these sections is a 25%. So bottom green is 25%. Then obviously you got two 25s near, which makes 50% obviously. The middle 50%, and then we have very much high in the top 25% here. Like I say, I think that's about 95% retracement so far. So if it's going to continue with this sell-off, I'm just going to remove that draw in a second. So obviously, if I was to get you to draw a bearish structure trend, sorry, it would look like this, and then it would pull back up again, and then continue to the downside. Can I copy and paste it? Yeah. So there's the exact same. Like if I was to say, draw me another couple of bearish swings, it would kind of look like that. Yeah, we would all agree. Yeah, I know it's a slight different point, but there you go. It would look like that if I was to say, draw me another bearish swing, right? But all it's done, all we're kind of open is it's come a bit higher. Obviously, it don't have to be exact same size swings or whatever. And then we're so high up that I'm now in a way just waiting for a lower time frame structure break to confirm whether this is going to do this or just continue up and reverse from this point. So currently hoping for sells. Haven't had my confirmations yet, but we can see I've got one on this green line here. So reason why I'm picking that green line is if we so that's a leg. This is currently obviously a leg from there to there at the minute, but it's the highs are changing still. So what we can do is we can start looking at lower time frame structures. We can start, obviously that's one leg, but inside this there's like a different structure that builds up the time frame above it, and then we can do that we can use the lower one to confirm where this might happen. How do you tell the difference between chalk and 1 minute breaker structure? So the terms change of character. Obviously, chalk stands for change of character. So let me just find you an example. So basically, we'll find a good example. I'm sure I see some earlier. I sent some to Tom for his live on Tuesday. I think it was this one. Yeah, right. So obviously focus on this one. I know I've just moved chart, so but this is it's quite a clean structure. Yeah. Now this is just a bullish structure there. Kind of need to find you a reversal one actually. So what the difference between change of character and break of structure is there's a break of structure here. So obviously this price action here takes this high, but it's a continuation of the trend. Yeah. So that's just a break of structure. Change of character is if this here, not that one, this low took that low and reverse. So change of character is reversal, break of structure is continuation. Could draw it out as well. So bullish, bullish trend. Right, and then we get a break, say there. Yeah. How and now I use breaker structure for all of it, you know, but the majority will be if it's continuation, it's breaker structure. Yeah. The breaker structure there. There's a breaker structure there. I'll highlight them. Got breaker structure up. So breaker structure. Now, obviously, this low gets taken, so that one there is technically a change of character. And then because we start making continuation breaks, so that from here, that tells you that prices has turned and is now bearish, which means that any further breaks, so that one there is that one there is back to being a breaker structure. Yeah. Does that make sense? Yeah, perfect, mate. Yeah, yeah. So change of characters reversal, breaker structure is just a continuation. It's as simple as I can sort of say. But I generally, like I say, I call all of it breaker structure. So yeah, it's you'll have to if I say something, if I say I'm waiting for a breaker structure, then I'm kind of waiting for a reversal at or depending on whatever shows. But yeah, I name them all breaker structure. But the large majority will understand. Don't do that. Yeah, will continuation, break structure, reversals, change of character. So I apologize for that, but it is what it is. The way I kind of looked at it was, I'll just go back to that actually. The reason why I kind of just name it all breaker structure is if that's the structure, you know, each point being broken is a break. So yeah, it's yeah. Order flow shift is another term, but it's all the same thing in it. It's just a different name for all of it. I mean, I remember when he was doing his education videos, mate. It was he brought in all like these new terminologies and stuff, and I just remember looking at it going, it's just a breaker structure in it, you know. Yeah, I think he was new phrases for realigning. I think if it, yeah, kind of order flow, OFS realignment, OFS, something. I just remember thinking, yeah, it's too much. It's just a break, or like I say, the majority will use this. So, but like I say, I just use break structure because there's a break in the trend, something like in somewhere. So that'll do. That'll do for me. Trading's difficult enough as it is, so without adding extra, what do you think, extra difficulties, there's no point. Yeah, you'd be turning his grave, mate, if you see that. So what I'm waiting for on this, as I was saying previously, sorry, is now. I'm telling you now, this is my 15-minute leg here. Now I know I'm on the 4 hour, but it's just so I can fit more candles on the screen for you. We can all agree that like this is it's pretty much all just heading in a bearish direction. Yeah, you can almost draw a channel between it. Yeah, so because that's all one overall direction, that becomes one structure leg. Right, we'll all agree on that. I don't think there'll be any arguments on that. So that's my 15-minute. But what we can do is we can highlight a structure internal from this 15-minute leg. So there's a lower time frame than the 15-minute leg structure, which looks to be. So if I draw it from the high, stick my magnet on. I'm going to go straight to there. We pull back down to there, which might be spread out, so it might be that one there. But I'm just going to draw it roughly for now. I'm going to go to there, on there. We pull back, and then maybe there, or straight to the downside. It's up to you with what you wanted to do at that point. Now, obviously, you could drop to the actual like 1 minute or 5 minute or whatever to determine whether you think that's a there and that's a pullback or not. So there might well be that might well be your lower time frame breaker structure there. Yeah, which means that there's possibly an entry from this as a order block here. Possibly. No, I've just drawn it like a bit rougher and a bit more. I always err on the side of caution. So if I'm unsure about this leg here being a structured pullback, I generally just go for one that I'm at least confident and say it's probably definitely at least that one. You know, don't really matter. I think both. I think that's probably one, and this is a separate one. But if I draw a level line across both of these, now I've drawn that one there. Price takes this high, and then it causes a bit of a pullback into something. The same happens over here. So if that's the high, price takes it, it causes something to pull back into this, which looks like it's that sort of order block area there. Maybe the one, maybe the one above it slightly. Maybe that there, because that's spread hour or market open. Yeah, so it'll be that, taps it, price just opens below it. But again, if that's spread hour, this little one here didn't happen. And then as again, we can see we've taken obviously these other highs now to the left. But the reason why I want to show you this is just so you understand that this lower time frame green structure, which is my one, makes up the 15. The two extreme points are the same. So this 1 minute bearish structure. So we get one, two, three, four or five swings, depending on whether you think that that's a pullback or not. So 4 or 5 bearish swings make up one 15-minute swing. The same applies for the time frame above. So the 15-minute swings will make up the higher time frame of 4 hour structure. Like one 4 hour will be 3 or 4 5 15-minute swings. So with that, we can then start to make the green structure up for the bullish leg. So I'm just going to delete that set. So we get a swing there. You get a pull back there, pull back there, possibly that there, and then we've made a high. Now, the reason this is important and why I've done it is to show you, as you can see, this looks completely different on the 15. So there'll be even lower, technically is a lower time frame structure than this, but you kind of you get it down, it's such a small structure, it's going to be more and more dangerous and it's going to fail more, if that makes sense. So if we believe this to be the last 1 minute pullback before we then make a new high, because obviously it's bullish, so any bearish price action that doesn't take a low is just a pullback. Now, that might sound insignificant, but to me it's important because it's determined. Like, so when I'm trying to relay information to you guys, if I'm saying pullback in bullish bullish trends, if I say pullback, that means it's I've got no intention that it's going to take the low. Yeah. So this is pulling back at the minute, but if it takes the low, that's a change of obviously I've set an alert on this low here. If it takes that, it changes that from being a pullback to the 1 minute has changed bearish fully. Yeah. So that's why I say I think it's important because the language has meaning, and then obviously I relay that to you. So I kind of want you guys to know what I'm saying, if that makes any kind of sense. Now I'm not obviously not a language expert or out, but so yeah, at the minute it's pulling back. It takes this low. So if we think about the drawing that I did with the breaker structure and change of character, I'm not going to change charts. You know, people watching it back can rewind to it. But we know if it breaks that, there's a good chance we are going to then see so from that high, it breaks the low. If I draw obviously some more bearish swings, we're going to see something like that. Yeah. So because this is the lowest time frame I'll work on for structure wise, this is my 1 minute now. I know I'm on the 15. It's just so I can fit more candles in and show you. But literally, you can see that this is the pullback that then puts in the high. So if price does come down here, I'll put a line so you can see price breaks the low, comes down in. If you imagine the candles are up to here or whatever, we know that price is going to pull back before it then continues its journey down to possibly 10, 15-minute bearish, if that's what it's going to continue its 15-minute structure downwards. Do 3 hours. Yeah. Like I say, as we said earlier, I'm anticipating if it does this 1 minute break from here, I'm expecting a new 15-minute bearish leg, which would, as I drew earlier, kind of that, yeah. Yeah. Of just this swing here, ignore that leg there. It's just, but yeah, if we get that 1 minute bearish confirmation there, I'm expecting this to happen to take out this low because then it would just be a continued bearish trend on the 15. 1 minute's bullish at the minute, but as soon as that turns bearish, it's telling us possibly new 15-minute low. Now, if we get that and we can catch something, now obviously there's still plenty of candles to play before it does break. So what we would look for when it comes to looking for an entry like this, it might not be there yet. What we would look for, but what I would look for would be a beautiful little trend line, real big important imbalance, but on the seconds chart. Now that will sound possibly wild to, so I'm ever so sorry I can't pronounce Malgazetta. Hopefully I pronounced that right. Um, yeah, that might sound wild to you, but I'll show you the importance of them in a minute. But yeah, so it might still need to be created, but if it does tell low, it will come back and tag into an order block that creates a Margaret actually in English. Oh, there you go. So you just want to be called Margaret? Sure. I don't know if you're just being polite now or not, but we'll, we'll take it. Um, so let's just take a look on the lower time frame. Oh, she's difficult. Yeah. Yeah, it is. So when it comes to an entry, if it does break the low, obviously, like so I dropped down to the real lower time frames to kind of indicate where these imbalances are. Now, if you didn't know the time frame, you'd go, yeah, this is where the this huge imbalance is created, and price is likely to react from it. Now we're only on the 10 second, but this candle moves 6 pips in 10 seconds, which is, as you can see from the rest of the price action here. Now this is a market close, so this might be shenanigans and nothing again. But as you can see from like the rest of it, price doesn't really move that much in 10 seconds that often. Now we get a couple of other little bits here, but they're not really that appealing to me. It looks all pretty much balanced. Yeah, so at the minute that one that we just looked at is probably possibly what it might go for the buy. Now, the reason why I say it's important imbalance, because if you look at that line there, it's generally where this imbalance starts from. We get a bit of a push, a little bit of retracement, but then a huge push again. Again, that's a huge amount of movement in such a short space of time. Not as big as the other one, nearly 4 pips. Does it tap it across here? Not quite. It about fills it there. If it depends how you would mark this area if you drop, but it kind of shows that price is generally coming back to fill imbalances rather than anything else. Now, I think it's the best indicator of an entry. So we get some imbalance created here. Look left, it fills it perfectly. Imbalance there gets filled perfectly. Yeah. So was it? I think it was Ginger that asked me earlier about how I mark zones. Um, so I always now we're on the 10 second. I'll generally for an entry that's how I'd mark it, but how I mark all of my zones is so if we look at obviously if you're marking it for a sell or whatever it'd be, I always go from I always say to cover the wick high, so wick high of that, and then I always mark it to the point in which the imbalance is created. So I'm just going to zoom in a touch. So this candle, last candle before the big drop, draw an arrow to it, turn it blue. That candle there, obviously, it's quite. There's not don't appear to be like much going on with that candle. And the candle afterwards, or two candles afterwards, you get a huge push away, which would now it changed slightly on an even lower time frame, but as a general, just to keep it nice and simple, is from that candle low, we would then say that this is imbalance. So it's to the start of the imbalance, which is this candle there, and then yeah, because the idea is if this is say an entry zone, my theory on it is we get all this kind of non-price action, just balanced, no imbalance, just normal price action, how it sort of should be. There's something happens in this time here where it's all balanced to then like it's like an order goes in from say the banks and then the bank that order hits the market and then bang we get a huge drop in price and then what the theory is that price wants to return to fill. So we're told that every order needs the opposite order to be balanced, basically. So every buy needs to sell, every sell needs a buy kind of thing. So because you've got to buy the order off somebody or sell it to somebody. So when someone sticks a load of money in the market and it does this, they kind of need to catch the people who want to take the orders from or whatever that be, which is generally why price loves to fill these imbalances. Yeah, which is why I use it as an entry model because we know it wants to fill them once we start picking say like this imbalance being filled and obviously the order block that creates it, the area that creates it, the supply demand zone, order block, whatever you want to name it, is because we know that we price wants to come and fill this imbalance. Now, obviously, there's plenty of them, so you've got to put it in the right area with your rules and everything. But yeah, that's why this is generally my entry model is a nice imbalance being filled. Now, if this was a valid trade from with all my rules, it's tapped into it perfectly, and then obviously go about and do its thing. It's doing it from an imbalance fill, and obviously the order block makes the imbalance because the order block is where the order goes in, and just obviously wouldn't trade from there because I don't think it's got my rules kind of thing. But hopefully you get the idea. So yeah, if this breaks this low, price will return somewhere in all this to then hopefully sell off. Um, just going to delete these so I don't think it's trades I've missed. Is there anything in all that that didn't make sense to anybody or wants me to try and explain something a bit clearer or just before I move on or out?
No, I'm good. I
Yeah,
got yeah, I like that.
good, good, good. Save message. All good, all good, all good, all good. So now I think we've pretty much covered the majority of what I would generally look for. Now, obviously, there's liquidity and things we can include in that as well. So let me just try and find some here. Now, liquidity is quite a simple thing. I mean, obviously cover it most weeks, so we've got a good touch, clean touch there. Got a real good clean touch there. Now I've got my setting for my lines to be the thinnest you can get them. As you see there, it's perfect touch there, perfect touch there. Now I know the two ends are perfect because it's on done with a magnet. So three clean touches. The other liquidities are so kind of going back to structure a little bit. So in bearish conditions, so this is bearish conditions, we get high, low, lower, high, lower, low. We can see it's sort of like zigzagging down with that structure as it is. In bearish conditions, the structure lows are liquidity because people would be, as soon as this price starts leaving there, people would be trying to buy from somewhere down there, possibly, yeah. Obviously, it gets taken out. And then obviously it's the same the opposite way. So in bullish conditions, so we know that just zoom out, see if the actual structure is about there. Yeah, so low, high, higher low, higher high, higher low, higher high. Yeah. So in bullish structures and trends, highs are liquidity. For the same reason, obviously, people think it's sort of starting to pull back from it, it's going to hold, and then it doesn't, but it just continues its trend. Um, so on this side, on the bearish side, I'll not do it for the bullish side, just show you because it's bearish at this from this point down. That low there's liquidity. That low's there's liquidity, and then obviously, and so on. Yeah. Same for bullish, but with the highs on that side. And then there's equal highs and lows. Now, I don't see that many equal highs and lows. It does happen, just not as common as people think. So my rules for equal highs and lows are they've got to be bang on equal in level in price. So a slight angle. Uh, that's that's perfect level because I've pressed shift and it's level, so I'd accept something like that. But what I wouldn't do is accept something like that. Yeah, not equal. It could possibly be part of a trend line if it's got three price touches on it at that point, but it's not equal for me. So price did that'd be fine. Obviously, could then take it because he wants to pass beyond it. But yeah, I wouldn't accept price level that's not level for an equal. For now, equals are 2. Obviously, trend lines would be 3, and then obviously the structure highs and lows are just 1 point. You know. Um. Now, the lads that have been on a few times will know that liquidity being taken. So if I extend any of these here, so this is taken at this point here. Yeah, that's 3 touches, and then when price passes beyond it. Now, liquidity being taken does not mean reversal, and it doesn't mean continuation. So if we think about that, if it doesn't mean reversal or continuation, then what does it mean? And it don't really mean anything. It just means there's a lot of like stop losses possibly being taken. But what we do know is now there's plenty of like these little trend lines that you can see on my chart here that they're kind of all over the place. Um, Barring possibly these two up here, which will probably get taken on the next swing up. If it buys up from here, they'll get taken when price if it does make a new high major high, temporary high. But the rest of them that we can see is they have all prices past pretty much all of them. Yeah, barring the top that I can see. So we can then say that price just likes to pass beyond them. So, like I say, and that just means that it doesn't mean it's going to reverse, doesn't mean it's going to continue in the direction it's going. It just means there's a price it was to pass beyond them. So, what we can then do with that information is decide where we would want to use trend lines in our system as a whole. So, if price was price was about there, let's say, let me just extend that again. Let me go back a couple of candles. Right, so price was there, and we've got this trend line. I would, because we know it wants to pass beyond it, so, and that's all all liquidity is. If I had a buy, so now I'll go a bit lower actually, just to make sure. If I thought it was gonna buy up from there, no, higher, sorry, higher. Yeah, I'll do it there. If I thought price was gonna buy from there, yeah. Now, I would be thinking there's a good chance it's going to come beyond this line here. So depending on how quick it gets there, whatever, if it took ages, definitely, because if price took the liquidity over here, it's already beyond the zone. Does that make sense? If you had an order on this, and obviously it does pass beyond it, yeah. So we know not to use it. We know it. We don't want to take a trade if there's liquidity that's kind of taking it beyond where our order would be. So then that kind of leads us into don't trade before liquidity is taken. And then, but what we can also use it for as well is if we have a trade, let's say if we sold it from this blue zone up here and you've got this down here, you kind of know that there's a good chance that price is going to go beyond it. Yeah. So you could set your TP at the point in where liquidity would be taken. So you can use it for targets once you're already in, if you've spotted it in the direction that you're trying to trade to. Definitely don't be sticking like just don't if you've got it marked, obviously, definitely don't be doing it, setting your orders before it's taken because your zone can be taken before the liquidity is taken, which means you're pretty much guaranteed to get taken out. Um, so that's pretty much liquidity explained. Hopefully that made a bit of sense as well. I'm trying to rifle through it because I'm gonna jump off soon because I'm gonna get to bed and watch the footy light. But um, so I've kind of covered pretty much everything you would kind of need to know anyway. The only The only sort of thing I haven't done here really is explained like a starting point and a finishing point kind of thing. But it's kind of all here as well if you look. So the basis of it is we are 15-minute bearish. Yeah, as you can see with this orange swings. We've pulled back deep into that zone, so we're in the top zone of that. Turn it blue. We've pulled back into the top quarter of this whole leg here in a bearish thing. Now we're just waiting for lower time frame confirmations. Once we get that, we'll just look for a nice imbalance to be filled and mark the order block. And that's the entry. Got the word. Um, oh, his laptop. But yeah, that's generally it. Now, obviously, we can maybe start to use structure as well to highlight where we think. Now, obviously, it's been a bearish structure going on from all the way up there. We can kind of anticipate maybe where we would start to see change of characters and major reversal areas. So, now I predicted this. There was a possible sell setup from, if I zoom in a touch so you can see it. Now we could have sold from somewhere in this zone up here because you can see this. So if I just map, sorry, I just map this. There was a possible sell coming up from somewhere in this high here because if you see this orange structure here, it was a bearish structure, medium 15-minute time frame. Yeah. Now I predicted that this high was going to get taken, even though we was 15-minute bearish, making lower highs, lower lows. Yeah. So what I used to be able to predict that was I used the time frame above. Now, if you look at this red structure here, obviously, so the 15, the 15s make up the 4 hour. 4 hours the red, 15's the orange. Because we are so far past the previous low in the higher time frame, red being the higher time frame, I knew we was possibly due a pullback on the red. So I think we'll get something like this in the near future. Whether it's from that point there or what, I don't know. It might go, it might go, it might do that. It might come well up here. It's just, but I just know that the 4 hours very likely to start a pullback. So it's just done this whole leg over the last year or so. Point to point is 630 days, so just under 2 years, a bit under 2 years. So yeah, when price come up here, I was very cautious and wanted to wait for further confirmations to it. Now, if it had done a 1 minute break to the downside from in here, once it tapped into this blue zone, yes, I would have got in because then that would have kind of told me that I think it's going to make another low, and then the 4 hour, so the red structure pullback might have come from after another swing. But just that knowledge of if you just look at this, the red draw, like the zigzags I've drawn all night, to be fair, once it passes the low, it causes a pullback. So as soon as price comes below this, where it says break structure there, there's a chance of a pullback at some point. Now this is well beyond this one here, all the way down here. Yeah. A lot of price, nearly a year of price action. It's still been in that direction and without pulling back. So, like I say, I knew we was well overdue a pullback, which meant I wasn't really entertaining much for the selling here. So that was just using a little bit of structure knowledge to kind of identify that, yeah, I think we're going to get a 15-minute break to the upside because the 4 hours well overdue a pullback.
Yeah.
I mean, it takes a bit of thinking about, but like I say, just starting to anticipate some swings and things and future price action. So
If you see your with your structure mapping,
yes, mate, yeah.
but you got your number 5 on that high.
That one there, yeah.
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 How come you've gone down to number 2 and not the next? Obviously, there's a little pullback and then it comes back up again. I think you've got like a change of character up there, aren't you, on another high that's next to it?
That one there.
Yeah, how come you've just like gone disregarded that and gone down to the next level? If you know what I mean.
Yeah, so if you see that black mark there, mate, let me delete some of this. Don't need it anymore. So there's a black mark here, yeah. That's stuck on the high, and this red one down here
Mm,
is the low. So obviously when we know that if we go back to that drawing earlier that I drew where the with a breaker structure and change of character on it, so I'll stick to that for here. So this is just breaking structure, breaker structure here, yeah. Which does it over here.
yeah,
Now, until this high and the black line here is taken, or this red one down here is taken, we are still bearish on this time frame. Yeah. So
right.
price can pull back. It could have done a pip lower than this high, and that still tells me that price is bearish on that time frame. So what we can think about with that is if we think that this is still bearish, yeah, then we know it's probably coming below this low at some point because it didn't take the high.
Yeah,
So, and that's basically what it did. So, but what we can do is we can use the lower time frame to kind of show us, which it did. So if we look at these little zigzags, yeah, I've actually got it drawn from a previous live. I'll just highlight it so you can see it. Yeah.
yeah,
Price come very high into this, didn't take it, and then showed us signs that it was not going to take the high because it changed character down here, up down in this little price, but well up in the previous leg.
yeah,
So
yeah. I got
that's this here, this low closing below, like passing behind this low, was the sign to get in, and there's a good chance we was taking this low, number 4. Yeah.
yeah,
Now that was a major move, and I think I actually missed this by about 20 minutes. Well, that's 160-hour trade, 162-hour trade. Now that would have taken a while to get there because obviously we're on the daily time frame, and you know, but when was it from? But it told us, it's 67 days, but to like grow an account by 150% plus, obviously you'd lose a few hour from swaps and whatever, but let's if you can double your account plus 50% extra, then it's worth holding. But like it why I use structure so much is because that's what's telling me where the market's going to go next. So that change of character up here on the lower time frame to the one above it was the sign, and
yeah,
then and like I didn't ignore it because that was a point I was trying to get in. I was using it for my current analysis, but because it didn't take the high and this didn't take the low, it's internal. So it's kind of doesn't mean anything to the overall structure because the structures were only basing on the overall highs and lows.
yeah,
Yeah. So this is internal. But what they we can use the internal stuff to determine because there'll be liquidities and things created in here. So we can use it to kind of guess where we want to be getting in, but it's not telling us what the overall structure is because it's like I say, it's just internal. It's noise. It's at that point, it's just noise,
yeah.
if that makes sense.
Makes
Now,
sense.
now that'll take a bit of getting your head around, and like the large majority would have gone, yeah, I don't think that's going to take a low from there, but like the rules that we use for structure, like this meets all of the rules that I made for structure, and yeah, and then obviously, like I say, if you have added liquidity and lower time frame stuff, that's the story it's telling you. It's telling you beforehand, and then it gives you the opportunity to kind of get in if where we want to be, kind of thing. Um, like I say, I know it's not easy to get your head around, and it took me a long time to figure it out, kind of thing. But I'm hoping by me putting these drawings up for you
Yeah,
that people will watch it back, and then, like I say, your break structures behind this low wick here. draws, and this is, I mean, this is a great example. So this like we use liquidity to try and determine where not to get in a trade. It can kind of tell us where to get in a trade after it's been made or taken. So if we focus on this trend line here, I'll turn it red. So at that point there, so let me replay that fairer. So if we was watching this live here, this low here, I'm just about to mark, which I'll turn green when it there. No, I'll leave it black, but I'll put it thicker. Yeah.
Yeah.
So at that point there, if price was here, we was watching it, but if we could spot this trend line, we know that this liquidity is going to get taken. Yeah, we know it's going to pass beyond it.
Yeah.
So we're not trying to buy it from that point here, even though it started giving a little bit of a push. It doesn't take the high here, I don't think, which it creates another one anyway. But we know that price wants to pass beyond this trend line, and if that pulling it down past the liquidity takes it below this line, then we know that this black line up here hasn't taken, and there's a good chance that that's going to be the signal to get in, which is obviously up here. That's the signal. So, like I said, that's a tight entry. I mean, well, it's not for me, it's 6 pips, but like obviously I don't decide what size my stop loss is. The market shows me kind of what it is with my rules that I've made around it. But it's generally all structure with a bit of liquidity to kind of guide us where to and not to kind of get in. Obviously, and imbalances and things like that. So, say liquidity is taken at that point, drags it lower. I mean, obviously, it shows that it makes more on its way down as well. So takes the low at that point. That would be my signal to get in at this point here. I'll see if I'll let it play out a little bit. Sorry, and then I'll show you what this entry would have looked like on the lower time frame. Although it was a long time ago, so I can't remember how I did it. But now, obviously, all these liquidities at this point would look like they're there before we would actually they've been created, a lot of them. So obviously, it's all hindsight, kind of like looking at the minute. But that's why we can use hindsight and old data to focus on what we do in the future. So as you see, it taps that perfectly, and then, well, like I say, it's dropped so far, but we can come here, see what it sort of taps into. Yeah, so we've got imbalances up here. Now, I don't know how I've marked this, to be fair. It was a long time ago now. So I've slightly changed how I mark things since this anyway, I think. So
You gone start of the imbalance on the other one.
yeah, I've probably marked it to include that one and up here, but it might have just tapped into this higher one. I mean, this might have even been just a data collection thing as well, but we've got a decent push up here, so I'm assuming I would mark it now. Probably mark it a bit like that, maybe. Just trying to maybe there. I think but I imagine that's been tapped anyway. So I'd be a bit tighter than I would have been, just shy of. So, but yeah, like I said, I mean that was beginning of last year anyway. So like I said, market's slightly different now, but you get the idea anyway.
Yeah.
They don't always work out perfectly to how I mark things now. How I would have done it before would work sometimes, and the new way wouldn't. But I'm generally better off with the way how I do it now anyway. So yeah, right. Unless there's any more questions, I'll call it there.
Going to bed now anyway, so I've got to get up in a few hours.
Yeah. It's gonna be a rule of getting up and that, but do it for the love of the game, don't we? So,
We do, yeah.
all right. I'll catch you guys later.
Catch you. Cheers, mate. Thank you. Bye.
Bye bye.